I listened intently to the member for Bendigo's contribution, and I think if I had $1 for every time she said fair share and donated it to the ATO, we actually wouldn't have a revenue problem anymore, because that was the incessant cry from that side of the chamber. I'm not going to go through in detail, like every speaker previous to me, the specific provisions in this bill. I want to speak a little more broadly, and there's a sense in which governments tackling tax avoidance, however it's formed, I mean, that's been a role for government for time immemorial, and it will continue, because like any tax law, there will be taxpayers who try to find the most advantageous way to interpret or to structure their affairs within those rules. There will also be cases where taxpayers deliberately contrive arrangements to get around those rules, and that's ultimately what we're talking about here when discussing combating multinational tax avoidance. Now, the Labor Party have all of a sudden discovered tax avoidance because it enables them to fulfil one major problem. They've got no savings measures. They haven't released their costings on their so-called changes to multinational tax avoidance, and they can pluck this $7 billion number out of the air and it fixes a few other issues for them. Well, the Labor Party never spoke about multinational tax avoidance while they were in government, even though our tax base was being eroded by an ever-changing economy. So all of a sudden in opposition they discovered multinational tax avoidance, but for 6 years we saw nothing from them. Now, inevitably, our economy has moved from the old anvil industries of manufacturing. We still have good advanced manufacturing in this country, but increasingly our economy will be based on high-tech R&D, intellectual property, and that poses a major problem for our tax system. So 100 years ago, when we were manufacturing widgets, and they may have been manufactured in one country and sold in another, it was very, very easy to ascribe the profit margin to that particular item because it was manufactured in one country, it was marketed and sold in another. It was relatively simple. You know, what are the inputs that go into the manufacture? What is the skill, the time and the effort that goes into the manufacture? Well, whatever we ascribe to that, that's the profit attributable to that jurisdiction. What's the profit attributable to the jurisdiction in which that particular item is sold, where it's marketed, where it's, the contractual arrangements are entered into? What are the profits we'd ascribe to that part? So it was always, in some senses, a difficult task for governments, but the laws were in pretty good shape in determining what profit would we attribute to one jurisdiction and what profit would we attribute to the other. But that changes and it becomes a lot more difficult when we involve multiple jurisdictions that may have many tens of inputs that come into one final product, and more importantly, where the inherent value in that product is not in the physical product itself. And the member for Bendigo mentioned Apple and Google. We've all got an iPhone. We all have an iPhone. Nearly all of us have an iPhone anyway. Now, the value of the iPhone, we pay a fortune for them. They're expensive, but they're extraordinarily valuable, and that's why we buy them. But the actual cost that's attributable to the physical material of that phone is only a minuscule proportion of its cost, because actually the value in that phone is in the intellectual property in its components, how it works, the amount of time and value that people put into actually developing that technology. And that's where it becomes a lot more difficult for our tax system. Where do we attribute that value? So therefore, which jurisdiction has a right to claim that taxable amount? And while that was happening, increasingly occurring during the former Labor government, they did nothing. They did absolutely nothing, said nothing, but then they had a conversion on the road to Damascus when they were in opposition. And all of a sudden we hear them carping about combating multinational tax avoidance. Well, if combating multinational tax avoidance was just the low-hanging fruit that the Labor Party suggested is, well then every Western jurisdiction and first world economy wouldn't be having this problem. It's extraordinarily difficult. And that's why I commend the former Treasurer for his work with the G20, because one jurisdiction on its own cannot and should not purport to be able to fix this problem. Inevitably, we have to work with comparable jurisdictions to ensure that there isn't anywhere that these multinationals who operate across many, many jurisdictions can hide or shelter income inappropriately. Now, there are inherent incentives for any economy, and we saw it in the last decade or so, to attract investment by trying to put in place extraordinarily attractive tax rates or extraordinarily attractive tax incentives. So whenever you have that inevitable contest between countries, there will be corporates, multinationals that seek to get the best outcome. Now, what we are doing in this legislation is ensuring, and we're attacking, those companies that contrive structures purely for the tax advantage. So if, for example, you're a multinational company that operates in 100 jurisdictions, but it makes sense for you to do so because in your particular industry, for your particular product or service that you're providing, it might make complete sense for you to be in Timbuktu and you name it. They won't be attacked by these rules. But what we will get to are the contrived arrangements with companies trying to utilise double tax treaties for their own advantage. And that's when it gets really, really tough. Because the reality is, and historically, we've had competition between jurisdictions because for every extra dollar that the Australian Tax Office laid claim to, well, that was $1 less than another jurisdiction got. So there was this inevitable tension between nations. But it's not a zero-sum game, and unfortunately in recent years what has been happening is income's been sheltered from both jurisdictions. So in the case of arrangements with, say, a US multinational that sells products into Australia, they might contrive a structure through utilising European tax treaties that means not only does Australia not get the tax that should be attributable to the profits, but the US doesn't either. So we actually now have a real incentive, and that's why I commend the former Treasurer for really leading the charge at the G20 to bring these first world economies together with robust tax systems to actually try and address these issues. And let's remember, we do have an extraordinarily robust tax system. But as I said at the beginning of my contribution, tax laws are not set and forget, because the minute you come up with one law, there will be a creative way to structure your investment in a different way to get a different tax outcome for that taxpayer. So governments must be nimble. And today isn't the end of it. Last year we did a great job in reducing the debt that was allowable under the thin capitalisation rules. That was one piece of the puzzle. Today we're debating, and I'm glad we have bipartisan support for this bill, which has a range of measures to combat multinational tax avoidance. These won't be the panacea at all, and it would be disingenuous for anyone to say they will. But I'm very, very confident that these rules will have a material impact, most importantly, on the future behaviour of multinationals who have income over $1 billion and that are operating in many cases, tens of jurisdictions. So again, I say, Labor, I'm very, very pleased that you have had the conversion on the road to Damascus. You are now supporting this legislation, although if I was a person in the gallery listening to the contributions from those in Labor, I'd walk out of Parliament and I'd say, I'm sure they must be voting against that legislation. I'm sure they must be voting against it, because I just heard 15 minutes from the member for Bendigo of how little we've done and how disappointed she is with the so-called inaction. Well, she might want to look at what was done for 6 years under the Labor Party, when our tax system and our tax base was being eroded, and they were asleep at the wheel. So it's very easy to discover these problems in opposition. I'm very, very proud to be a part of a government that is actually in a methodical and sensible way trying to address these. Because let's remember why we have to be methodical, consultative and sensible is not just for our relationships with our trading partners, because as I said, in some cases every extra dollar of tax that we put our hands on, that's $1 less for somebody else. We do not want to discourage investment in this country. Now, we want people to invest by the rules. Now, I say to some people in the community that we, as all PAYG taxpayers, we don't have the ability to structure our affairs or to reduce our tax. We get our poultry tax deductions each year on various little bits and bobs, but by and large, we don't have those opportunities, and nor should any multinational. But it's a bit like grasping sand at the beach. The tighter you hold it, the more slips through your fingers. And so we've got to be very, very careful here that we structure arrangements in a way that multinational companies will have certainty in their investments, and provided they haven't entered into those contrived arrangements, that their structures and their investments in this country will be respected. Because let's remember, again, as I said earlier, in a world where increasingly our wealth will be embodied in intellectual property, investment in research and development, not in hard commodities like they were 100 years ago, it is increasingly more difficult for any jurisdiction to actually point to the point in the chain of the iPhone example that I used earlier, of what a value is attributable to that. So in Australia, we import the iPhones. They go into an iPhone store, that's where I bought mine, and they're sold for a few $100s. Well, what part of that profit is attributable to Australia? Should more be attributable here because this is where the purchase is made? Or should more be attributable to the jurisdiction which had the hundreds and hundreds of highly skilled people working for Apple who came up with all of those component pieces of the iPhone? And I'm talking about the software here. I mean, that's where, in my view, that's where the value is embodied in an iPhone. It's not the physical plastic, it's not the physical metal, it's not the components on the inside. It's a bit of a lump of plastic and metal, if you ask me. Its value is in the intellectual property, and that's why these rules are so important, because it is so much more complex that we need to do that. But we've got to strike the right balance. For years and years and years, Australian taxpayers have been struggling under the weight of transfer pricing documentation, and I wouldn't want to see any proposals put into this parliament that increase those requirements, because in many cases, and I saw it in practice, in many cases it was an exercise done to tick a box with the ATO rather than actually trying to achieve a substantive outcome. So I think, having read through this bill, that this will strike that balance. I also encourage the Treasurer in relation to the country-by-country reporting. I think that's important as well, and I think anything that adds more accountability to these large companies will hopefully mean that they do stick to those sensible investments, those sensible structures that make sense, rather than the contrived arrangements that really this legislation is trying to attack. We do not want to see companies structuring their investments into Australia in such a way as to get a benefit from either our tax system or, quite frankly, our trading partners, because unfortunately if we do, it will only end up being a race to the bottom. So, Mr Deputy Speaker, I congratulate the former Treasurer and current Treasurer on this bill, and I commend it to the House.